Welcome, my name is Peter White. I'm a tax partner with Accru Felsers. One of the most common questions I'm asked is, when people are establishing a new business, in what form should they operate? There's a number of choices which you can make. The most common forms are a proprietorship, where the person carries on business in their own name, a partnership, where they carry on business with one or more partners, a company, which is perhaps the most common, and that's usually a proprietary limited company or a private company, or a trust of some sort, whether that be a unit trust, a family trust, or one of the more recent versions of trust in the form of a hybrid trust. Today what we'll go through are some of the key features of each of the four main structure types and try and highlight some of the merits and disadvantages of each of those structures. A sole proprietorship is probably what people start out with first. And that's simply a case of Peter White going into business, selling apples, as I am a human individual with nothing more to acquire, nothing more to do. I of course need an ABN, and that is premised on the GST rules which came in 1999, with the effect that anyone who wants to pay me needs to make sure that the person they're paying has an ABN. Now that requirement is consistent across the four structures, whether that be a proprietorship, a partnership, a company or a trust. Second question is, do I need to register for GST? If you're going to be turning over more than $50,000 in the next 12 months, or have turned over more than $50,000 in the last 12 months, there's a requirement to register for GST. That brings you into the domain of business activity statements, quarterly lodgements of those things, as well as the need to charge clients GST on every invoice, and to make sure that when you're issuing an invoice, it satisfies the layout and content criteria as specified by the GST Act as to what constitutes a valid tax invoice. Now, there are 13 components, but of course with GST having now been in for 6 years, we've all seen a tax invoice, but things like ABNs, addresses, the amount, whether or not it includes GST, the nature of the service supplied, the address and so forth. As a sole proprietor, that's no different. We need to issue tax invoices. One of the benefits of being a sole proprietor is generally there's only one BAS to be lodged, there's only one bank account that operates, the money that goes in can come out. It has the benefit of simplicity. Equally though, the benefit of simplicity is matched by some of the negatives. There is no ability to legitimately split income with spouses or children. The money that's earned by Peter White as an apple grocer stays with Peter White. And now those rules are called the personal exertion income rules, or the 80-20 rules, which you might have heard about, which came in the 1st of July 2000. The benefit of that is that from an accounting perspective it is simple. The downside though is that Peter White is sued, whether in the capacity as an apple grocer or as an accountant or driving a car, there is no asset protection whatsoever. It is simply Peter White, and if I am sued, whatever the profits are of that business are available to creditors should they choose to pursue me.